John, that's right. ViacomCBS shares plummeting down about 15% after missing Wall Street expectations for top and bottom line results, also giving lower than expected guidance. Now, CEO Bob Bakish on the call this morning tried to shift focus away from what he called a transitional quarter towards what he says is his new strategy. Now, in contrast to rivals including Netflix and Disney, which are ramping up spending, he says that his company is focused on making more from their current investment.
Our content strategy isn't about spending more. It's about better aligning the combined company spending with growth potential and maximizing the value of our content, IP, and franchises across our now larger asset base. That means putting the full power of the company behind our biggest priorities.
Bakish also laid out his plan to accelerate ViacomCBS's momentum in streaming and digital video, announcing that they have 22 million domestic monthly active users of free Pluto TV and 11 million subscribers between Showtime and CBS All Access. They said CBS All Access will become the base of one of their content platforms. They'll expand it with content from the company's cable channels.
Our going-forward approach to streaming is rooted in the belief that the streaming world will evolve similarly to the linear world. That means it will have free, broad pay, and premium pay segments. And just like in the linear world, we'll have streaming product for each.
Bakish did increase the company's guidance on cost savings from the merger by 50% to $750 million, though that has not helped the stock today. And analysts are starting to weigh in, Citi warning that if the ad market performs worse than expected, ViacomCBS could face greater pressure than the rest of the overall market. But Evercore saying that today's weakness could serve as a good entry point for longer-term investors. Back over to you.
Julia, question. My head is spinning looking at these results as we talk about a golden age in television across revenues and operating income. It's like everything's down. TV entertainment, cable networks, publishing, film entertainment year over year, all down. Is there something looming on the horizon for ViacomCBS that would be positive? Because if you look at Disney or Comcast or any of the other players, it's like, well, you win some, you lose some, something's down, but something's up. I don't see anything up.
Well, it's a golden age of television for consumers, John, but it is a very tough time for the media business as everyone tries to sort out the future of streaming. Now, what Viacom and Bakish were saying on the call this morning is that this is a moment of transition. They had 11% lower content licensing revenue. Now, that points to the fact that we've seen so many different streaming services launch. All of these different companies are trying to figure out how to make the most of their content, and a lot of them are spending more on their own content. And if you look at Disney as an example, Netflix, though they're still buying some content, they're also producing a lot internally. And what Bakish is saying is this was a transition. The future is going to be about us making more from the amount we're spending on content. I think it was really notable that he did not say they were going to be spending billions and billions more, but just saying that they want their content spend to be more effective. And they're really going to be pulling all of these assets together, creating a multi-tiered streaming service that's more similar to what we saw from Peacock, which is that Comcast service that's going to be launching over the next couple of months. So he really wants to make it sort of one-stop shopping, bring together all of their assets. But a lot of the analysts on the call pointed out that some of their cable channels like Nickelodeon, their ratings have been in the decline. So they need to figure out how to transition all that content to be more valuable for streaming consumption.